Hello, ladies and gentlemen. This is your teacher Osman Ali, and I'm recording the video for the solution of the exercise 4.5. Now, again, as we are actually discussing the income statement chapter, so we need to prepare a multi-step income statement actually in this question also. But here we will have one of this first special income statement item by the name of extraordinary item actually. Now you have already watched a video on the concept of what do we mean by extraordinary item and discontinued operation, and you have also watched a video by now that how to do the adjustment of that. So let's do the adjustment of this in a numerical aspect as well. Okay, so let's go through the numerical and let's see what information we need and what information we don't need actually. So information related to interest revenue is given. So obviously if we are preparing an income statement, we do need this information. I'm gonna put a tick here. Information related to cash. Cash is such an information which is concerned to balance sheet, so we don't need that in the income statement. Sales figure, yes, we need information on the sales figure. Account receivable, we don't need information on the account receivable. Prepaid insurance, we don't need because it is a current asset. Okay, sales return and allowances, yes, it do affect my revenue, so I do need this to prepare income statement. Allowance for doubtful account is a contra asset, current asset. Okay, so we don't need that. Sales discount, it do affect my revenue, so I need it. Land, information on equipment, information on building, we don't need them. Cost of goods sold, obviously we're gonna need it to prepare the income statement. Accumulated depreciation of the equipment, it's contra asset related to long lived asset, we don't need it. Accumulated depreciation on the building, we don't need it as well. Note receivable, nah, we don't need. Selling expense, yes, we do need it. Account payable, current liability, no. Bond payable, no. Administrative and journal expenses, yes. Accrued liabilities, no, because it's a current liability. Interest expense, yes. Note payable, no. Loss from earthquake damages, yeah, obviously it is a loss and it is an extraordinary item loss, so yes, we need that to prepare the income statement. Common stock quantity, or it's not the quantity, sorry, the worth, we don't need it because it's equity. Retained earning value, we don't need it because that's related to equity as well. So I have just categorized it, the information, into we need it or no, we don't need it. Let's solve the numerical quickly. Now if you see here in the question, we got sales value $1.280,000, but we got sales discount and we got sales return as well. So whenever you see these words sales discount and sales return, so it means that the concept or the use of gross sales will be actually present in our numerical. So let's start the numerical quickly. Okay, we start with the first figure, which is our gross sales actually. Now if you remember from the numerical, the sales figure that we have is $1.280,000. I will write it here. Okay, $1.280,000. Now from this sales figure, obviously I'm gonna subtract the discounts that I have offered because it is something which decreases my revenue, and I will subtract the sales return as well, or allowances as well. Okay, sales return and allowances also, I'm gonna subtract that value also. Now if we see here in this, we have a sales discount of $45,000, so I will subtract $45,000 sales discount, and we had a sales return of $1,50,000, so I will subtract $1,50,000 also. Once I subtract it, the value that I get is actually called as net sales. So let's subtract this. When I subtract it, so we will get a value of around $1,085,000. Okay, so it's like 12,80,000 minus 1,50,000 and minus 45,000, you get $10,85,000. Okay, that's it, we got our net sales figure. The very next word that we need actually is the cost of goods sold. So let's subtract the cost of goods sold figure from this sales figure here. Now if you see here, the cost of goods sold figure is $6,21,000. So let's go for $6,21,000 minus, let's subtract it. As you know, the remainder would be called as gross profit for the organization. Okay, and the gross profit figure that we will have is around 4,64,000. Okay, this will be our gross profit figure. After the gross profit subtraction, we are supposed to minus all the operating expenses of the organization. So I'm going to give a heading of operating expenses here, and let's start finding that what operating expenses we have actually here. Now if you look into this numerical here, I see here selling expense as an operating expense. Okay, and I see admin and general expenses 95,000. This is 1,94,000, and this is, so let's write down these two here. First, selling expenses. We got a selling expense of $1,94,000 if you remember, and we got administrative related expenses. So I will just, in short, I'm going to write admin expenses to save the time in MBs. So that is $97,000. Now if you see in the numerical here, all around, so I don't see any other operating related expenses. So let's total this expenses. Okay, so that would be the total of my operating expenses, which is $2,91,000 if I plus these two here. Okay, so let's minus it. 2,91,000 minus 4,64,000. The remainder that we get is $1,73,000. This would be titled as my EBIT, earning before interest and tax. Now that's the operating part of it. Let's go to the non-operating part, non-operating expenses and non-operating revenues. Let's search first of all for the non-operating revenues first here. So if I see here, we got interest revenue. It's also revenue, non-operating, $186,000. So I will plus this. Okay, plus interest revenue, plus we have it $86,000. Okay, and then from if there is any other revenue here, non-operating revenue remaining, so I'm going to use that, but I don't see any other revenue remaining here, so that's it. Then we will go for non-operating expenses. So okay, the non-operating revenue is written. Let's go for non-operating expenses. If I look around, so I will see a non-operating expense of let me find it if there is any. Interest, okay, that's done. We get here interest expense $60,000. It's a non-operating expense actually. So let me write it here, minus interest expense of how much? We got an interest expense of $60,000. So let's plus 86 and let's minus 60. Once I do it, the remainder would be actually called as my EBT. So the remainder we have is $1,99,000. This is called as earning before tax. Okay, then I will subtract the income tax or the tax expense out of it. So it's an expense, obviously that should be subtracted. Let me see if we have any tax information. We do not have any figure given here, but yes, if you see here, we had a percentage, which is the income tax rate is 34%. So what I'm going to do is that I'm going to multiply 34% with $1,99,000. When I multiply that, I will get a figure of 67,660. So I subtract this. When I subtract it, I get a remainder of $1,31,340. Now, ladies and gentlemen, when you look into the basic income statements, so obviously this thing here, 1,31,000, this figure here must be called as the net income. But as we are dealing with a situation where we had a loss from the earthquake and it is an extraordinary item, so as in the basic concept development video of extraordinary item and discontinued operation, I told you that we do not write here the net income, we write here income before extraordinary item or income before discontinued operation actually. Okay, so I will not title it as net income. I will write here that this is my income before the adjustment of extraordinary item, or income before the extraordinary extraordinary item. Okay, because sorry, okay, I went little offline. Okay, so that's like, let's assume that it's like in a straight line. Okay, so that's related to here. Okay, now after this, then I will adjust if there is a loss due to the extraordinary, so I will minus it. If there is a gain, then I'm going to plus that. Okay, so it is a loss, so I will write here minus. Okay, and then I will write here loss from earthquake. I can write here earthquake, or I can write here extraordinary as well. It's that I have like only one extraordinary item in the numerical, so that's why I'm just writing the name of that. So what is the amount of loss that we have? The amount of loss, if you see in the numerical, we have is $1,20,000, and I will write here in the sub column $1,20,000 is the loss. Okay, now the thing is, it's written here the it's a before tax loss. It means that the tax adjustment will be done for this loss actually. Okay, now you know the basic you have watched the basic video of the adjustment, so you know like why I need to subtract the tax or adjustment here. Okay, so I will go for the tax adjustment, which would be a kind of help from the government side because I had a loss. So the tax adjustment, now the tax percentage is 34%. So when they take tax from you on 34% rate, then they're going to help you in 34% rate as well. So what I will do is that I will multiply 34% with 1,20,000. When I multiply that, I get a value of 40,800. So that would be a kind of a help actually. And when I subtract this, the overall losses that I will account for is 79,200 actually. Okay, so the loss I have incurred is $1,20,000, but there will be a tax adjustment, a kind of a help, so of this much. So the remaining loss will be adjusted here, means I'm gonna write it here, and this money I'm gonna like adjust it in my tax bills. Okay, so you had a separate video for that. Now if I subtract the $79,200 from 1,31,340, we get a remainder of $52,140, and this remainder would be actually called as the net income for the organization. So if you see here, previously we used to say that this value is my net income. Actually we used to claim that this is my net income, but now as we have extraordinary item available in the numerical, so we cannot say this is my net income. We say this is my income, but before the extraordinary item. Then I have done the adjustments, and then in the last, whatever is the remainder, this is the net income I have earned, which is $52,140. $140. Okay, thank you very much. Stay safe.